is Cecil B. Moneygetter, host of Money Talks, a new financial news upload that is laser focused on digital finance, cryptocurrencies, robotics, electric vehicles, stocks, the cannabis industry, and much, much more. Tune in and join us every Monday, Wednesday, and Friday at 7 p.m. Eastern on our Information Meets Execution YouTube channel as we bring you financial news uploads, one trending topic at a time. And don't forget to stay listening, because money talks. Good evening. Today is Wednesday, July 3rd, and you're watching Money Talk. The first news we're coming with tonight is political news. Pelosi loads up on more NVIDIA stocks and gets rid of more Tesla stocks. What could this possibly mean? Laws to ban members of Congress from buying and selling stocks and options have grown over the years. One of the most followed members of Congress for stock trading activity is former Speaker of the House, Nancy Pelosi, thanks to the large purchases made by her husband, Paul Pelosi. Pelosi disclosed several new stock trades on Wednesday ahead of the 4th of July holiday, continuing a recent tradition of reporting trades around market holidays. The transactions, as reported by Benzinga Government Trades page, are as follows. Bought 20 call options, Broadcom Inc., $800 strike price, June 20th, 2025 expiration date. Price size is $1 to $5 million. Bought 10,000 shares of NVIDIA Corporation on June 26th. Purchase size $1 to $5 million. Sold 2,500 shares of Tesla Inc. Sale size $250,000 to $500,000. Sold 2,000 shares of Visa Inc. Sale size $500,000 to $1 million. Prediction fulfilled. Congress Trading tweeted, "She always reports right before a holiday to avoid media coverage, but she is actually becoming more predictable this way." Pelosi previously disclosed buying call options in NVIDIA valued at $1 to $5 million ahead of Christmas holiday, with the filing coming on the Friday before Christmas. The Congresswoman has often filed stock disclosures on Fridays or around holidays. Pelosi's husband, Paul Pelosi, is a venture capitalist who regularly makes sizable stock and options purchases. The former Speaker of the House has said she does not share stock tips or inside information with her husband, but the timing of several trades has drawn scrutiny from investors. The Visa shares sold were listed as partial, which means the couple still owns shares of the credit card company. It was reported several years ago on 60 Minutes that Pelosi participated in the Visa IPO, securing 5,000 shares at an IPO price of just $44. The Visa transaction drew red flags at the time, with the company's headquarters located in Pelosi's home district. Increased interest in Congress trading activity, which has outperformed leading market indexes in some years, has led to several ETFs launching. The Series Portfolios Trust Unusual Whale Subversive Republican Trading ETF and Series Portfolios Trust Unusual Whale Submersive Democratic Trading ETF track the trading activity of Republican and Democratic members of Congress, respectively. A new ETF is also on the way from Total Capital that will combine trades from both parties and base holdings on the trading accuracy and performance of members of Congress and their committee assignments. Get in the comments and let me know what you're thinking and how you feel. Up next, news from the cryptocurrency sector. Bitcoin faces risk of over $1 billion in liquidations if price hits this level, analysts warn. More than $1 billion in bearish bets will be wiped out from the Bitcoin futures market if King Crypto spikes to $62,600, according to a noted cryptocurrency analyst. Ali Martinez, known for studying on-chain and technical indicators to gauge price directions, highlighted this possibility in a Tuesday X post. Over $1 billion will be liquidated if Bitcoin now rebounds to $62,600. The high short liquidation leverage indicating that most traders are bearish on the asset and at risk of significant losses if the market moves against them. Lending credence to the above observations, the number of traders holding short positions for Bitcoin was higher than those holding long positions, as exhibited by the long-short ratio on CoinGlass. Bitcoin has dragged lately, owing to investors' anxiety over defunct exchange Mt. Gox's liquidation of $9 billion worth of the cryptocurrency as part of its repayment obligations. The sell-offs are expected throughout July. That said, analysts, including the top Wall Street strategist Tom Lee, predict a sharp rebound from the next month, sticking to his earlier forecast of the digital currency hitting $150,000 in the second half of 2024. At the time of writing, Bitcoin was exchanging hands at $60,907.44, down 2.7% in the last 24 hours, according to data from Benzinga Pro. Get in the comments and let me know what you're thinking and how you feel. Up next, we have news from Wall Street. Amazon and Apple, the battle of the all-time highs. As the stock market sizzles mid-2024, investors are eyeing two tech titans, Amazon.com Inc. and Apple Inc. Both stocks have hit all-time highs, with Amazon hitting the $200.43 mark and Apple stock hitting the $220.38 mark during day trading on Tuesday. With both stocks being extremely popular and watched by Wall Street investors, the common all-time high event raises the burning question: which is the better buy? Amazon's stock has soared up 53.59% in the past year and 31.63% year to date. It recently touched a 52-week high of $200.43 with a market cap of $2.8 trillion and a PE ratio of 56.02. Amazon is a heavyweight in tech. Analysts are bullish, with 43 ratings predicted in the 12-month price target range of $200 to $245, averaging $222.50. This suggests a potential upside of 10.17%. The latest ratings from Needham, Wells Fargo, and B of A Securities released between June 26th and July 1st imply a 10.66% upside with an average price target of $221.33. Apple stock has also performed well, up 14.45% over the past year and 14.41% year to date, closing at $220.27 on July 2nd, with a market cap of $3.36 trillion and a PE ratio of 34.26. Apple remains a market leader. However, analysts forecast a modest upside, with 33 ratings suggesting a 12-month price target range of $164 to $275. The average is $219.50, indicating just a 0.86% potential rise. Recent ratings from UBS, Needham, and Oppenheimer, dated June 28th and July 1st, offer an average target of $222, a minimal 0.27% upside. Now, in the Amazon versus Apple battle, what's the growth potential? Amazon shows more promise with a 10.17% projected upside versus Apple's 0.86%. Amazon's PE of 56.02 suggests higher growth expectations compared to Apple's 34.26, but also higher risk. Amazon dominates e-commerce and cloud computing, while Apple leads in consumer electronics. Apple's larger market cap and lower PE might appeal to conservative investors, whereas Amazon's growth potential attracts those seeking higher returns. Amazon's stronger recent performance hints at continued upward momentum. Both Amazon and Apple are stellar investments. However, Amazon appears to offer better growth prospects with a higher potential upside. Investors looking for robust growth may find Amazon more appealing, while those valuing stability might prefer Apple. As always, investment decisions should align with individual goals and risk tolerance. Get in the comments and let me know what you think and how you feel. On our Information Meets Execution YouTube channel. You can also check out the 734 list.